Good morning, everybody. All right. Well, market's got to go up. I was kind of saying something, laughing at myself. I was going to say, otherwise, it's going to go down. And that, while that's always the case, last week we saw a very decisive move to the upside. After painful sideways price action for 6 weeks, erratic up and down, up and down. There was bullish price action, buying on the dip, the two bottoming tail bars on the weekly chart that we saw, and there's consolidation and the breakout above that resistance area. Two relatively wide bars. It's got room to go up. Bias has to be, it's going to go up, which means, everybody knows the news, debt ceiling. It came out like they're going to work it out. And well, a few minutes ago, I saw a representative from New York saying, hey, the other side's not doing anything. We're here doing, we're trying to work it out. I guess that's always the back and forth, but, it doesn't sound like it's all worked out. And we heard some Biden noise over the weekend about that, but we'll see what happens. And eventually it always gets worked out, but maybe not in the moment. It will create some downside if it doesn't. That's what happened in 2011. So we've got these kind of wide range bars, more so in tech than the S&P, because the S&P is obviously being held back by financials, and they're up at resistance, and everything that moved, not everything, but most things that moved are at resistance. So they're stalled. And so technically, just looking at the price action, things are stalled and consolidate a bit while we wait for the news. So we might have some, subdued trading early in the week here, but let's see what makes sense technically. And as we wait for the news to come out. And was interesting, the markets are holding here. One of the Fed, I don't know what he is there, they're making comments or saying, oh, we got to go higher, at least another 50 basis points higher. That was a few minutes ago. I guess that's what that little dip was there, but nothing severe. So markets are taking it in stride. I would imagine institutions want to start hitting the sell button on any, I don't know, slight news, that stuff that's been floating around there anyway, until this debt ceiling thing gets resolved and something more definitive comes out. So it's probably going to be a bit choppy until we see that, see what happens, but it better be resolved. And otherwise, just based on the technical pattern, we just have a situation here, a technical situation, that breaking below these lows is going to start a downside draft, because the patterns say longs are in charge and they're going to take it higher. So if that doesn't happen, it'll go down. People hit the bid, and that's just the way it is. So with that being said, we just have to see the patterns that develop and see if it follows through. All right. So spiders, where are they at? Well, kind of unchanged. Just looking at where they are here, they were a little bit higher. You can see as it moves on the daily chart there, where it's at. So kind of just waiting in place, waiting for whatever. Yeah, so no big deal. And 35. I'm getting to it, Jake. I had 30 written down, but maybe things have moved a little bit. 42.30 and 41.50. So, and 41.50, let me just look at the S&Ps first, and then we'll go to SPX. So things were lower overnight. We're looking at the futures now, and they came back up. So some buying on the dip, and, so pull back into this little support area. Let's see what time that is. Yeah. So it was higher, dip, back up again. It's on the daily chart. I mean, we'll see how this ends at the end of the day, but this kind of a pattern at the end of the day is exactly what you want to see, based on, this initial move up, a gap down and buyer step up again, bullish price action. So it could, I don't think we're going to get a 1, 2, 3. I think by the end of the week, there's got to be some resolve one way or the other that makes markets move. So, what is it? ES is, oh, yeah, 2150. So SPX and McGraw, I didn't see your email on Sunday until just now. So they always got interesting stuff about what's going on there with options, those guys. But I see the expiration 25 days out, 4150 is the big number now. And so just based on open interest, and that isn't, this week, it's 25 days out expiration, this 4150 is an important area. Kind of like, when you've got calls and puts, kind of bumping heads in each other, kind of what they call, maybe pins there, but it's probably going to, if it does dip down there, it should provide some kind of support. Things bounce around. Is based on technicals, though, the deeper, which is what we're interested as pattern traders, the deeper this retraces into these two bars that broke out, the more damage is being done technically, because it's not supposed to come down there. Like we're looking at the futures, any downside, gap down should be bought. Any intraday move to the downside should result in a bottoming tail type of a bar. So bullish bars in alignment with this move up out of this area. Exactly what Jake is posting there on YouTube. I know you guys can't see it, but he's confirming what I heard earlier, that Fed bullish this year, he's expecting 2 more rate hikes. Now, this guy is dictating what, the Fed is going to do, or I guess that's his opinion, but there's other people that they have differing opinions, but the more of them that are aligned with that, I guess the more we can so I guess McGraw, he's a non-voting member. So why is he opening up his mouth? But I guess it must mean something if he's saying it, because he's sitting there at the table with the rest of them. But I guess, as always, we'll just have to see what actually happens, because now more and more bias is coming out that they're going to stall at this point and do nothing. And, it's always a moving thing because of new data that comes out. So we'll see. Anyway, SPX. And again, these levels are tighter than what they used to be. And either one of them are within striking distance. 4250 or 4150 or 4230 today are within striking distance either way. And, over here, where we had those tight levels, none of them were ever hit. But, with news out there that could come out to move markets, you got to be a little, in my opinion, a little bit more conservative and maybe pass on these. But, we're saying call side a little riskier. Yeah, because of the breakout here and the bullish price action versus, moving to the downside. The U.S. has a lot of bills to pay, a real catalyst of inflation. Well, one of the things that happened last week was the move up in interest rates. And so that's got two ways of looking at it. I mean, normally, on a historical perspective, short intermediate term interest rates going up. I'm not talking about Fed funds rate, but intermediate interest rates going up are suggestive of, hey, the economy is doing well. There's a demand for money. And so interest rates rise as there's that demand for money. And, that's a positive thing until interest rates get too high. And then it becomes, compared to risk in equities, the risk grows for equities versus them being low. So right now they've broken out above this area. But are things so great out there? I don't think so. And when you look at what's happening in all these retailing stocks that have been getting plummeted, Foot Locker was one, Nike, I think, was downgraded today. And if you heard, for the first time in a very long time, there was a downgrade on Apple this morning. I don't know what happened with Micron, but that broke out, the semiconductor stock, and that's lower. So there's some, cracks in the wall going on here. And just looking at our internals, breadth is god awful. Sentiment has been getting better, but getting toward a risk zone. So, but this is a news-driven market. So what's happening here? Well, I think there's a very, very strong belief, that, let's look here, very strong belief that everything's going to be okay. So this money is coming out of the bond market, which makes interest rates go up, and going into equities. But what are they really, in a big way going into is tech. And you can see this beautiful breakout wide range bar clearing these pivot highs. Now, the next level isn't that far away, but with a consolidation that is, about a year. And you can see at the bottom there, it's about a year. When I see something like that, and unless it breaks below this wide range bar, this pivot high should be, I wouldn't say ignored, it'll be a stall, but prices should get through it because it's so far away, this correction through time, building this bottom and a wide range bar. Your bias needs to be that, hey, it'll stall there, but keep going higher as long as it doesn't violate that low on a closing basis. So the debt gets done. USA has a lot of bills to pay. Real catalyst is inflation. Yeah. And you know what? I mentioned this last week. Biden saying whatever he was going to do, we'll reduce the debt by $3 trillion over the next 10 years. And that's a joke. 10 years, you're going to reduce $3 trillion over 10 years when it's 31 trillion. I mean, I don't know, but that's political nonsense, but that's what they do. They just think that we're all stupid. All right. Other markets. Right. Beautiful. Right. These are the futures, of course. And, while they've broken out, they're already at this pivot high back here. So that suggests some consolidation. As I mentioned, news coming, some chopping around here, so forth. Things look fine. It better not go back down to the bottom of where it started, common sense. Russell improving. And we've been talking about these head and shoulders patterns forever. They haven't broken down. Can it get above the right shoulder? We'll see. The same kind of bullish price action going on so far, but to a lesser degree. The Dow probably looks the worst. It's just erratic up and down and back and forth, but just focus on this part of it, to a lesser degree than the others. It is consolidating at resistance, and we'll just have to see how it all shakes out. The dollar, that's up a bit. And so, back here as it was coming down, and I talked about, okay, look to the left, should bottom out here. It took over a month. That was like the 6 weeks of going nowhere, and now it's broken out. Now, is something changed from where it was here as the dollar was going up and interest rates were going up and the markets were going down? Now the markets are not focused on this. They're not yet anyway. So we'll continue to keep an eye on it, but, bullish price action, market is ignoring what was bearish to it before. And I guess that's another positive until we see something different. Scott saying China banned Micron from selling chips into certain markets in China. All right. Well, we'll see where it ends the day. Thank you for that. I saw it, the gap down. Gold, as you know, broke down. We talked about the probability that it would if the dollar went up. It's got a topping pattern. It's in an uptrend on the weekly. Let's see as it pulls back towards some support, what goes on. Right, Bitcoin, it's interesting that it's just hanging here. It moved down. Just put alerts above and below. So again, uptrend here, pulling back to support where buyers should show up. But the daily having rolled over, this is where, as you look at multiple time frames, things can become a bit confusion because this is rolled over to moving down, suggesting it'll go lower. It's under the moving averages. The weekly is in an uptrend. And so part of what we talk about in the course is like, what kind of top is it that gives us some insight as to what's going on? And we got this rounding kind of a top, and then it breaks the lows. So what you need to see in a situation like this is more of a, bottoming action or more bars as this pulls back. So a time correction as you're looking at this time frame where maybe you get a dip down and you get a bottoming tail bar. So unless this has for some reason to rip right back up again, that's what I would look for is, some pullback kind of price action a little deeper into this area and then try to stabilize. So a little, maybe 25,000, give or take, but that's the support area. Not that far away, but that's where it should come down to if it's constructive and hold somewhere in there and not break down below it. What else? We looked at interest rates and bonds. We always want to see if the transports are participating when something bullish happens, and really not too much so. But one of the things that we saw that gives us our bias as to what should happen. So we see some bullish price action. Friday, there was some profit taking, and we got a lot of red bars. So what you want to look for in stocks that not necessarily look exactly like this, but a couple of days up in a red bar, what would be bullish? A red bar ignored. That's bar by bar analysis. So we should get a red bar ignored, say a gap down in green bar. Well, that's a continuation pattern, but we pick better ones than the transports. So it's a little insight as to what to look for and how to measure other stocks. So the ones that moved above some resistance and they've got a void above, those type of continuation patterns with a red bar ignored are ideal for continuation patterns where one like this has to hit resistance, and resistance is just not very good looking. However, airlines, something more like this. As we look inside that sector, I don't know why airlines are acting as well as they are, but this is a wide range bar, and there's your red bar. And if we were to get a RBI, and it's got room to go up. So that's the kind of pattern that looks much more bullish to continue higher. But, if we want to see the other markets go up with it, if the other markets are going down, this certainly isn't going to go down. And you got to keep an eye on crude oil as far as that goes. And so far, it's down here near support, pretty significant level here. So that's it. Initially here, I think we probably have some choppy price action until some news comes into this market to give it some guidance. All yours, Dan.
Good morning. See, I just had a couple of alarms go off. And yeah, y'all were talking about a couple of these fangs in the news today. AAP alarm. All right, that's just on the bearish continuation watch list. Yeah, you all talked about a couple of these. Apple downgraded 173, but no pattern. Meta's getting fined over in Europe, but look how buyers stepped up here. That's kind of a non-issue also in connection with that bullish daily, weekly, monthly. And who else is in trouble? MU, yeah, getting China's going after them. That was a beautiful gap. 1, 2, 3 breakout we were talking about on Friday or on Thursday rather. Semis just ripped. We have a bunch of open trades in the ETF letter that are all doing great. And guess what? We only have one short in the ETF letter, and it's this XRT. So that's actually a great illustration of why we love trading sectors as opposed to a broader market that has the good and the bad. And the same with an ETF of why we drill down and trade the best of them, like NVIDIA over Intel. Look at Intel here. I like it on the monthly as a possible core long, but NVIDIA is just the king leader of the sector right now. But it's extended, nothing to do with it. XMTR alarm. I see one print up here. We're already in this, but over last week's high. That's a beautiful ad. KRT. That doesn't look right. There's no volume, no pattern, Thomas. I think it's a typo. And this has a bunch of overlapping bars. I hate swing trading like this. But look at the gap up, and it's a nice buy setup. Potent reversal here pre-market. So that could set up as a day trade. Yeah, XRT. Yeah, we're shorted already, but it looks good. And as Greg said about the retailers, there's so many ugly ones. Foot Locker, I was watching on Friday to see if it would bounce in the excessive gap category, I call it. And that one went nowhere. Compare that to Home Depot's earnings gap. And compare it to Cisco's. This was real on Thursday. And the buyers just had a field day on buying it at cheaper prices. So a lot of retailers look horrible. There's a lot of retailer earnings this week though, or else I would have put some of them in the letter. DCFC alarm. This is penny stock, kind of a dollar stock. Bottoming pattern. I always have early alarms, but over Thursday's high might give you a little swing trade. There's Foot Locker. Airbnb alarm just went off. This was a sell setup. Bear went to, I was with the markets holding up so well, or at least spiders and Q's technology. Well, we know about the bad market breadth, but we actually found a lot of bearish patterns that we put in the letters this weekend. And here's one of them. A lot of them like this with a little bounce on the daily, but there's 1, 2, 3 weeklies all over the place. And there's one right there, Airbnb. And CVX is gapping down here. It's buying PDCE. So they're getting a nice pop premium. DEA. Sam, I think this might have been on your list. I wrote down, I set an alarm. Just a breakdown. Breakdown after 2 upside shakeouts. I like that one. CRH McGraw, you asked me about this one. It's an ADR, which you can see with all the gaps, but it's bullish, daily, weekly, monthly. So this is a long watch. I didn't even see if it had earnings or not. Jack Henry, short watch, but kind of don't like that bounce back on Thursday. Berkshire broke out, bullish daily, weekly, monthly. Let's watch that on a pullback. Autodesk. It's technically not a 1, 2, 3 because Friday was deep. In a textbook 1, 2, 3, we wanted in the upper third. Nevertheless, put spread idea over 30-minute high. MU, gotta watch some pullback. DDS is bearish, daily, weekly, monthly. That looks great. 30-minute low. Ryanair airline. Bullish, daily, weekly, monthly, gapping up a little bit here on earnings. And we'll see if maybe a put spread idea. And UE, one of the metal stocks. Metals have been weak. This kind of a bear flag. Bearish engulfing Friday. Let's watch 30-minute low. Sandal, little marijuana stock. It's worth watching. Trip, kind of a bear 1, 2, 3. After breaking support, has a price void. Let's set I think I have an alarm, but let me set an alarm at 40. Rain. Yeah, I saw there was one bio that was up nicely. It was a bio though, but it was gapping up. Wow, that is massive. That is a massive, ugly gap. Rain is not nice to them today. SBAC. Short watch. It's kind of a pattern. Let's say hypothetically it were to gap up to 240, then it would be a day trade long and a put spread idea. But as of now, it's a bearish consolidation and a downtrend. So I set an alarm at 232. Dollar General alarm just went off. See that? Just breakdown trade. Let's put that in this window right here. I think I have this as a call spread idea. Mealy. Lyft, I know is a dog. So that's, you can short that. Daily, weekly, monthly look horrible. And I keep saying, I don't like this because I use Lyft Uber all the time, and I do not want Uber to be a monopoly. GNK alarm is going off. Okay, so these are good to go. Mondays I'm the most busy with all these alarms on new trades and openings, but yeah, this looks great. Breakdown trade. Okay, so this we were going to buy puts. I'll buy June 15 puts. Let's see what they're at. 145, 165. Okay, so let's try 150. We're not going to get filled at 145. Oh, yeah, there we, but the spreads just opened up, so yeah, we are. KR, yeah, that alarm went off too, absolutely, yeah, yeah. Yeah, KR is good to go. Oh, shoot, I have CDNS for Jose. Hold on, Jose, I'll do it right now. CDNS. Jose on YouTube. This is on my list also. And we're getting the pullback that we want for 1, 2, 3, 4. So definitely, Jose, it's on the swing watch list already. In fact, I see it right here, number 448. So yes, it's on my list too. Dollar General. That was a call spread. So that's good to go if you're filled. Really? 220, 225. Closed at 62. I'm looking. Yeah, it's 20 by 45 now. Well, yeah, the problem is, Austin, well, two problems. One is, yeah, they suck the juice out of the 220s, but your second problem is look at the spreads of the 2 1/4s, 0 by 75. So the computer is picking up the midpoint and skewing that. So here's how I'm going to fix that.